we reflect on every deal we passed on from 2017 to 2019, we're like, whoops, because every single one. You're right. You could just throw a dart at a property if you were investing in, especially 2017 or 2018, and you won. So a lot of people got hubris, right? They got overconfident. They thought they were great operators, especially people that were writing the rent growth. I started to see the writing on the wall when I saw like, the offering memorandums from syndicators where they were projecting 8% rent growth, right? Every year for the 5-year hold they were trying to do, right? Like they didn't even think to themselves, who's going to afford that?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Robbie Hendricks, is the managing partner of Venture Real Estate Co., or VREC, a private equity multifamily apartment investment firm based out of Cincinnati. Currently, they own and operate over $270 million of multifamily apartments in the Midwest. You can find him at vrec.com or on Instagram at Robbie Hendricks. Robbie, thanks for taking the time today.
Yeah, thanks for having me, man. This is gonna be fun.
Now, when we talk about the multifamily space, and I was mentioning this to you before hopping on here, there's a lot of interest from folks. I know a lot of single family fix and flippers that are looking at multifamily now, especially now that there's so much new construction. It almost feels like you have to pivot out of flipping to some degree. But I also know multifamily's not been the easiest segment to be in over the last couple of years. I know personally many syndicators and then fund managers who've either been sitting on the sidelines, waiting for the right time to get back in, or, unfortunately, I know distressed, syndicators who really bought when things were at the peak and then saw COVID happen, rates go up, the cost of materials go up, and then in places like Austin, Texas, rents go sideways, which doesn't help. What's been your experience, over the last, 5 or so years and having seen all of this?
Yeah, well, you're right. Obviously, it's been a really interesting 5 years, really ever since the pandemic with multifamily investing, which is really driven by interest rates going to zero, right? But we're in the Midwest, like you said, we're in Ohio, so we operate a little bit differently than some of like the boomer bust markets like Austin or Phoenix or Atlanta, places like that, where we didn't have the same new supply sort of glut that those markets did. So we didn't get nearly as disrupted in our market. Obviously, in Cincinnati, we're also like a secondary or even tertiary market compared to those like Nashvilles of the world. So we didn't have as much speculation come in. We didn't have a lot of, there were a lot of new syndicators, right, that got really excited about
Yeah.
multifamily, like going in Dallas and they're going in Austin, San Antonio, and Houston. They're just, everyone's raising capital, everyone's buying deals. Like people really got FOMO, fear of missing out, right? That people got really serious about buying property. And I think a lot of people, especially in those hotter markets, kind of betrayed their criteria. They got, variable rate debt. That people got really cute trying to grow. So our market was a little different. We like what's one thing we follow, loan maturities. We follow like variable rate debt, things like that. Our market didn't have much of that at all. So Cincinnati, I guess we were a little bit insulated from some of the mania that happened in other markets, which also prevented us from having the same sort of bust here. So while maybe we didn't have the same sort of excitement from, I don't know, 2015 to 2022
Yeah.
that, Phoenix did, where everyone's quadrupling their money, we also didn't have the same sort of pain, which was good, which was
Now,
good for us.
when we talk, you mentioned, that time period. It almost seemed like you couldn't buy a wrong deal. I've heard, I wasn't involved in real estate at this point of time, so this is secondhand knowledge. But I've heard, investors saying, we're going to exit this deal in 5 years, and they're hitting it in two, right? And
Yeah.
around that time period. And so when you're seeing that happen, and then you're seeing, this shortage of housing nationally, and
Mhm.
then you're also seeing more people get into syndicating, it almost felt like, okay, this is a great opportunity. We can't buy a wrong deal. Then COVID happens.
Yeah. Yeah, well, yeah. Well, it was funny. We reflect on every deal we passed on from 2017 to 2019.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
We're like, whoops, because every single one. You're right. You could just throw a dart at a property if you were investing in, especially 2017 or 2018, and you won. So a lot of people got hubris, right? They got overconfident. They thought they were great operators, especially people that were riding the rent growth that happened through the pandemic. People thought they were so good at operating or managing properties easy, right? Which is completely wrong. Managing single families or multifamily is hard. It's very difficult to deal with tenants, whether it's a single family rental or at scale. And a lot of people learn the hard way that you just can't buy stuff because it's in a Sunbelt market and ride it forever. I started to see the writing on the wall when I saw the offering memorandums from syndicators where they were projecting 8% rent growth, right? Every year for the 5-year hold they were trying to do, right? Like they didn't even think to themselves, who's going to afford that, right? You could just tell everyone got fear of missing out back then and it got a little ugly.
Now, when we talk specifically about the market out there, you mentioned there wasn't as much speculation, which can feel like, hey, am I in the right market? But on the flip side, you're also seeing like, fires in other markets, and you're not experiencing as much of that. What was there any element, now having seen that, of a greater appreciation for what is happening, that is more stable in Cincinnati, to where the folks who are investors in Cincinnati and stayed in Cincinnati now are even, more focused on acquisitions in Cincinnati versus in looking at some other markets?
Yeah, 100%. The stability here. Well, yeah, we reflect on it just grateful, right? Because who's to say? I mean, who's to say if we were in Dallas, like I went to high school in Dallas, who's to say I wouldn't have gone out there and taken on short-term debt and, tried to play that game? And, our office is a half mile from my high school. So like I'm where I live. I know the market. I know the rents. Like, so we're very lucky to be in sort of a stable market. Um, just there's low drama, like very stable employers. Like we don't have a lot of new population moving in, but we don't have a
Yeah.
lot of new supply. So while we have like net positive migration, it's not like Phoenix, But then we're only building 1,500 units a year, right? Or Phoenix built what 30,000.
Yeah.
So those markets are going to have disruption. So we have a renewed gratitude for our market for sure. Just boring, sort of stable. Maybe that's just our sort of Midwest roots.
Well, when we talk about real estate in general, I've had a guest tell me the fast money is slow money. And,
Yeah.
that's kind of, symbolizing, embodying what you're talking about with Cincinnati, with this stability aspect, in that, you might not see the kind of speculative growth that you might see in some other markets. You're also not going to see, the reverse of that, which is, people getting into a point where these mortgages are doubling and then rents are going sideways. It can be a complex storm of, what could go wrong. I do want to pivot a bit here though, Robbie, and ask you about the single family space. And we were talking beforehand about even getting in to investing through house hacking. Right now, I've had a number of people, both on the mortgage side and then single family investors, tell me that the way for newer folks to get into real estate right now, if they're, hey, what's the one way that they would recommend is through a house hack.
Yeah.
As someone who's done it yourself, tell me a little bit about that, and then also too, what's the process like of getting qualified to buy, a small multifamily, to then actually going ahead purchasing it and then finding a tenant for that other side.
Sure. Well, we'll start with I'm old, right? So I bought my first house hack in 2006. So it's literally my 20-year anniversary.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And of course, in 2006, you know what that means? That means I overpaid, right? I overpaid for a townhome. It was right before the market blew up. So I actually just bought a townhome, and I had this grand plan of moving my friends in. So I had this plan where I'm like, you know what? I'm going to buy this townhome. I'm going to finish the basement, build a bedroom in the basement with a full bath, and I'm going to have this 4-bedroom townhome, and I'm just going to rent the other 3 rooms out to my friends. I was young. I was 23, right? So I was 23. Like I didn't have a girlfriend. I didn't have a dog. I obviously didn't have kids, and all my friends were complaining about rent. Everyone's always complaining about rent being expensive, right? So it's not like it's new these days. So I was like, well, wait a minute. If I just rent the rooms out for like $300 a month, something like that, it's going to cost way less than them renting an apartment. So I house hacked that way. I didn't even like buy a 4 unit or a duplex. I was like, yeah, I was literally just like, I'm going to buy a house. I'm going to rent by the room. I'm going to take care of all the finances. But those three friends paying like $300 a month plus utilities, that paid my mortgage, right? So that's how I started. That's literally how I started. And then I was like, this is such a good idea. I bought another house, finished another bedroom in that, and moved friends in that house. So that was my house hack. My friends were happy because they felt like they were living in a dorm. So they thought, that this only works maybe in your early 20s, right? Yeah, because obviously a better way to do it. Like I have a lot of friends that bought a 3 unit or a 4 unit, like sub commercial, and they would just live in 1 unit, obviously rent out the other 2 or other 3.
One of the
Um,
interesting things about those small multifamily, 1 to 4 units, is if you go to the right lender, they can underwrite that as income, so that those units can be included in your income to
yeah,
qualify for the. And I'm a realtor in Texas. I wasn't aware of this. I,
yeah,
I thought I thought it would be like, hey, they might view it favorably because it has the potential to bring in rents. But I didn't realize that, going to the right lender based on the appraisal, a certain percentage of the projected rents can literally be used as your income.
yeah.
So not only are you then potentially offsetting, a large portion of the mortgage and
Mhm.
building equity with time, but then you also have the ability to get into the on ramp of real estate investing that way.
Right. Yeah, that's a great point. Honestly, I didn't I didn't even know that you could do that until I was done trying to house hack. By the like so, and then I was like, what the heck? That would have been a much better solution. Also, I know other people they're putting down 3% or 5%. I put down 20% like an idiot. Drain my savings. You kind of don't know what you don't know. Like even with my friends, I didn't even have a lease. So I didn't even think that way. I was like, I'll just move in, whatever. So you just kind of learn that way. It wasn't until later when I got into multifamily that I realized you could use that to even in sub commercial, like a 4 unit, you could use that income to qualify or you get a better deal.
Now, when we
So
talk specifically about acquisitions, at the deals that you're doing at scale, walk me through what these properties look like that you're acquiring. Is there an ideal like buy box that you're looking for in these properties?
Yeah, well, we're value add, so I don't know how much you guys talk about that on here, but we're value add guys. Obviously, what that means is we're looking for places that are distressed. Maybe they've never been updated. Maybe they're just hopefully they're just dated. But oftentimes it's they're beat up pretty good because the ownership doesn't know what they're doing. They don't want to reinvest into the property to renovate it. I mean, if we had our ideal property, it would be a B class, like late 1980s, 1990s construction. Back then they built really nice size 2-bed units. I would love it if it was never updated, so it looked really just old and gross, and the rents are low because it's old and gross. Maybe they never built, like, amenities, like, so there's maybe no pool, so we can build a pool, build a clubhouse, and really just, build a modern property from, some older bones. Um, I wish we could always buy those, but that's not the case, right? Because we're a little bit, um, agnostic. Like, we just wanna find good opportunities where we can add value. Like, recently, we bought a 353 unit portfolio, and it's old.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
It's like 1960s, really beat up. Like, some guy bought this C-class property from out of town, like, just sight unseen, I swear. This guy bought 353 units in a very tough submarket in Cincinnati where, like, you should never buy real estate in a difficult submarket if you don't understand the submarket. So like, in this example, this guy paid 90,000 a unit for this property. We bought it for 50,000 a unit, like 2 years later, and we paid a fair price too. That's just how much he overpaid. So anyway, we're looking for value add stuff like that. And look, we'll buy stuff as small as 30 units. Of course, I think our biggest property is 240.
Now, when we talk specifically about the funding for these deals, um, are you raising 100% of the funds? Are you doing this in conjunction with commercial loans? What's the funding look like for this?
Yeah, yeah. So we're always raising LP equity, right? So we partner with private investors. We have some high net worth folks that fund our deals for us, but very often we go in at like 65% LTV, right? So we're bringing 35% of the equity for the loan. We also raise the equity for the capex, the renovations, the reserve budget, things like that. So like the deal we just bought was 353 units. It was I think like a $17 million purchase. We raised $10 million, and in this case, the bank's going to fund some of the rehab too. But yeah, we always use commercial debt. Once the properties are stabilized, then we typically, or of late, we've been refinancing with agency debt. So Fannie Mae, Freddie, things like that.
So I had no idea that that was available. So they will you can refinance a commercial loan into Fannie and Freddie. Interesting.
Yeah,
So
so almost all of our stabilized properties have Fannie debt.
I think I just had the wrong information given to me. I was told that commercial debt goes to Wall Street, Fannie and Freddie buy single family.
No,
That's not
maybe no. I mean, we refinanced 3 properties last year with Fannie Mae.
now. Specifically, when talks are, when folks are looking at getting into multifamily investing, they of course might not be able to buy hundreds of doors, but let's say they're buying less than 20 doors.
Yeah,
I've heard a lot of people right now talk about seller financing. I've had many people come to me as a realtor saying, "Hey, can you make seller financing offers on multifamily properties?" What's your perspective on seller financing? And is this something that folks you think can do to purchase property?
oh, it would be great. I mean, it's all about whether you can find a seller to do it, right? It's if you can negotiate better financing terms and have a seller hold the note, that's awesome. But to your point, you have to go through the numbers to do it. But those are the properties to do it. Those 10 unit, 20 unit, 30 unit, the mom and pop owners. Like they'll entertain that stuff if it's a way for them maybe to avoid a tax consequence. Like a
Yeah.
lot of them have been holding these properties forever, and they are so far in the money they don't want to eat the tax consequence. So maybe the seller financing route is a great idea for those smaller properties. Obviously, as you go bigger, you get institutional size, 100 plus. Those sellers they're not interested, right? They want maximum dollar. They want to sell it. They typically want out. But I think it's a great avenue for someone on the come up. If you can go find an 8 unit or a 12 unit, get the seller to finance it, gives you some real flexibility. And ideally, maybe you could not raise capital. I'm a pretty, despite the fact that we syndicate and we've raised like $130 million. We have a great track record. We love our investors. Boy, I'm often jealous of the people that did it without investors, and kept it in house and started small, learned the ropes, pulled cash out, bought a couple more. I think that's a great way of doing it. And then you don't have the pressure and the risk of managing LP capital.
We are coming up on time here, Robbie. Any new projects that you're working on, and also what's the best way for folks to learn more about you and or your team?
Sure. I mean, new projects. We're actually about to do our first new construction, so that's a whole new step for us is getting into the development game. We've been working on a deal for 3.5 years, so we're about to build 142 Class A units, which is pretty cool and a really good submarket. I'm not going to sell you on it, but we wouldn't do it if it wasn't great. So we're gonna be doing that here soon. It's been a real learning curve. As for people, if they want to get in touch with me, I actually am on Twitter or X more than anything, talking shop. It's just Robbie Hendricks on there, so you can come say hi. Obviously, our website's just vrec.com, vrec.com. Come say hi.
Robbie, thanks for taking the time today.
Yeah, I appreciate you. Thanks for having me.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.